All right, good Saturday morning. It's, August 6th. This is our weekly meet and greet. But yeah, I'm talking about ICT's latest series called Ends. Um, so basically, this series addresses what most people have concerns with. And he addresses it from a standpoint of somebody who's new to trading. Um, there's this common misconception that you kind of get mentored, or you take your course, you learn the setups, you start trading, make it, and you start making money, instantly, and you're able to quit your job and all that stuff. It's not really the way it works, right? Like in a vacuum, that's kind of how we all believe. We believe that there are no outside uh, influences or interferences, right? All of us have some sort of pressure that drives us to make what we make, whether it be, we've made this much money before, or, some of us are the type that as soon as we get a raise, we spend it, or maybe when we, in anticipation of the raise, we spend it. Most of us aren't the type of people who get the raise and still live. Our means. I also saw a video from Aristotle Investments. If you guys know who that is, a young guy. He was in the Army. He was an E4. He got out. He made $1 million before he got out. But he does options trading. But the common theme in those videos were to live below your means now, right? If you're spending everything that you make, it's darn near impossible for you to ever make enough, right? The first thing you have to do is reduce what you're putting out, what you're spending. And I know people don't want to hear that, but gearing up for this recession, we would say the same thing. Hey, man, watch what you spend your money on. Watch what you spend your money on, And I know I get dogged a lot about being cheap and not spending money. You never know where a person is coming from, first of all, but you also never know what demons that person deals with on a regular basis, especially when it comes to finances and, managing money, or in my case, going big. I like to hit the long ball. I like to hit the home run, and for a long time, that killed my trading efforts. And at some point, I got tired of just, I'll make a lot of money and not lose a lot of money. And I make a lot of money and not lose a lot of money. So you go through this vicious cycle, kind of like if you're dating, whoever you date, and you are who you are, they are who they are, and you go through this cycle until eventually you say, well, no more. I'm not going to put up with this anymore. Or I'm not going to, do that anymore. It's the same thing with your trading. Once you realize that you're not going to be a millionaire your first week, your first trade, your first month, your first year, more than likely your first 5 years, you're not going to be a millionaire. It's just not going to happen. If you resign to that line of thought, then the real lessons and the real learning and the real progress can start taking place. If you learn how to look at a chart and figure out what a bullish order block is, and you trade up from that bullish order block, you take whatever your profit is. You see what a bearish order block is, and you trade down from that order block, you take your profit. There aren't going to be big gains, man. I mean, you might make $27 on that trade. Trade might take 4 hours. You made $27, right? Or $28 for easy math. You make $7 an hour. It's below minimum wage. It's not a lot of money. but you don't understand that it's progress, right? You're not looking at it as progress. It's a win. And those wins all tally up, at the end of the month, the same way that those deductions all tally up at the end of the month. So if you go online, because I know nobody has a checkbook, but if you go online and you look at your checking account and you start looking at your withdrawals, it won't be a bunch of $1,000 withdrawals. It'll be a bunch of small withdrawals that eat at your thousands of dollars that you make. And that's the same way if you reverse engineer your trading, a bunch of small gains will equal thousands of dollars if you do it that way. But the problem that we have as individuals is we only want the huge gains. Most of the time, the questions I get are geared around getting the most out of your trade, and it's not necessarily getting into the trade. How many times have we said, and I'm not going to ask you guys individually, but just think about this. How many times have we said, man, I'm not going to take that trade. The stop loss is too big. Dummy. Don't worry about the stop loss, dummy. You can add entries along the trade, right? That's the second and third order effect. But don't worry about that stop loss. Worry about recognizing that opportunity, right? So many times, I can speak for myself. I'm worried about the stop loss. I might have bungled the trade up. Maybe I lose the trade. Maybe I blow my account, because I use a big stop loss and I entered the trade and then it pulled back on me. Where if I use that bigger stop loss, it wouldn't even affected me. You know what I'm saying? At the end of the week, that trade followed that order block. The trade ended in profit. But I had a blown account that week. So that trade cost me whatever I paid for that account and the anguish, right? When I would have won that $27. And that $27 would have been a plus in my account going into the next week, right? So if you tally that up, over a 12, 13-month time period, if you're buying an account a week or 2 accounts per week, you're easily spending tens of thousands of dollars when those trades are actually winners, and you're just mismanaging the trade because you can't see the bigger picture. You're swinging for the fences. You want to hit the long ball instead of tally those small victories up. A lot of times, you guys will talk to me on the 5 o'clock call, and I might be a little frustrated. Don't mistake my frustration for me expecting you guys to be perfect. The frustration is probably more geared to me, as somebody who's trying to help you along and not being able to either get the point across or get you guys to get the results, right? So that's, where my frustration lies. If I can be the guinea pig, the crash dummy for you guys to become better traders at a faster clip, than I did, then that's what the sole purpose, the sole goal, of this experience is. But I can't do that without your vision and your effort, right? The work starts with yourselves, like you have to defeat whatever demons are telling you to go big, right? That are telling you, you can make $1 million this week. It's not probable, right? It's not probable. You're probably going to bungle up the trade trying to make that $1 million this week. So what I think needs to happen, no, there's nothing on my screen right now. But what I think needs to happen is the focus needs to go back to the processes. The focus needs to go back to what it is we're trying to capture, right? I had a beautiful entry method into a trade. It involves an order block. It taps you in. For the most part, that trade setup works like a charm. Now, no setup is gonna make you win 10 out of 10 trades or 100 out of 100 trades, but it will make you profitable, right? Now, how much profit you pocket, it's really up to the trader. You know, there are ways you can manipulate profit by adding entries or whatever. But if you don't ever get the basics of that strategy, where you see your setup and you wait for the tap in, then you'll never capitalize. You'll never make that better for you. You never be able to refine down and get a better entry, because you're not even patient enough to wait for your setups to take place. And the goal of that way of trading was to help people anticipate trades versus react to what the market is doing. There is a difference. So back when I was trading with Ruby, I would wait until Ruby's signal came out. Then I would go look at my charts and see if I saw the same thing. Or I would just put that trade signal in my MT4 and then go look at the charts, right? And try to make sense out of why she put that signal out there. But the way that it needs to happen is, on the weekend, we look and we see the setups that we expect to come to fruition. We mark up our charts, we place our position tool and our alerts, and we just sit and wait. And then as our alerts go out throughout the week, we can decide whether or not we're taking those positions in those trades, you know, based on a couple of different factors. Have we lost 2 trades in a row? If we lost 2 trades in a row, then I would suggest you just sit the rest of the week out, right? Also, if you're into active trades, are you in a position that you can move those stop losses to break even before you take on additional risk? You know, those are important too. So there are several different things that we have to consider as our alerts and whatnot go off. But the point is that we're in front of the market. We're anticipating the market to come to us. You know, the positions that we marked up, and then we expect the market to go to wherever we have it going. That's ideally how you want to be as a trader. You don't want to be the guy or the girl who's in the market reacting as the market punches you and pushes you around. Once that starts to happen, you become discombobulated. You don't know what direction the market is going, and your percentage of taking a loss, and sometimes a catastrophic loss, goes way up. Okay, so just understand, you know, that there is a method to the madness, right? So if you don't take anything else from this, go watch that Ends series. It's a 4-video series. I don't know how long each video is. I listened to all of the first one and most of the second one. I think the first one is about 35 minutes. The second one is a little over an hour, I believe. But it's very good information. And the way he breaks it down is useful. Now, it's not the first time that he's done a breakdown on his theory of how you can make it to $1 million in 10 years, you know. But I think the takeaway here is this is a long process, right? Take the long view. If you have some huge wins in between, those are bonuses, man. Like, and you will have big wins in between, but the key is not to rely on those. It's kind of like bonuses at work or whatever, you know, good months, overtime. Those happen, but you don't rely on, you don't do your bills around overtime. Yeah, Felicia. 3 and 4 are coming. But I just want to share that with you guys before we started this week's analysis. And I didn't call you a dummy. I was really referring to myself. But hey, if the shoe fits, please join me in being a dummy, okay?
No, first of all.
Please join me in being a dummy. Because sometimes when you realize that it is you who's the dummy, then you can fix it, right? It's just recognizing the opportunity to enter these trades. And as we go through some of these markups, I will explain what I mean. Okay, so for those of you who know me and understand how I like to trade, we have a weekly order block here, right? This is AU.
I don't see anything, Todd.
Okay, let me I guess if I hit share screen. Okay. Y'all, it should be coming up now. So for those of you who know me, this is AU. I like to trade order blocks. This is a weekly order block. Here's another weekly order block that didn't come back and tap in, right? This weekly order block, hopefully we'll get a tap in. But the way I like to trade the order blocks is, or the way I taught, you guys, is to enter, place your entry at the bottom of this order block right here. Place your stop loss at the top of this order block, right? Now, sometimes price wicks past, or it goes up into these wicks. I'm a hedger, so it doesn't really matter. I'm going to have a hedge position where you have your stop loss. If your stop loss gets hit, I really apologize in advance. I mean, that's going to happen as part of trading. But there's a pretty good chance if you utilize this method, you're going to use a 66 pip stop loss, which is not bad for a weekly order block. But you have a 253 pip radius that you're trying to gain. All right. The ratio is not going to be a what is that, 8%, 6%? It's not going to be quite 6. If I put the stop loss and the entry where I suggest them to be for you, this would be a 3.65, which is still a 3-to-1. You're going to gain 3% of your trade once this activates and this price pushes down. Okay. Now it might take a week and a half for the trade to hit your take profit. A lot of you guys were looking at me like, man, 2 weeks, man, 2 weeks to make 3%, whatever, right? And as a seasoned trader, I feel you, man. Like, I want to make 10% every week. But what I didn't tell you, when I was teaching you this trading method was, once you get in this trade and it starts pushing your direction, you can drop down to the 15-minute time frame, get you a second entry. Maybe it's a 5 pip stop loss, and you can make 50% all the way down, right? So there are levels to this. Like there are ways to make your money, but like when you go and you pick up a basketball or a football or a volleyball or wherever it is that you pick up, we don't teach you how to be Michael Jordan. You got to be a bench player first. I mean, you have to learn how to dribble. You got to learn how to shoot. You got to understand what offense to run and defense and all that good stuff. So this is just a basic way you can identify a trade, right? There's a bearish order block. This is a basic way you can identify an entry right here. A basic way you can have a stop loss up here that will generally, because sometimes it's going to run through here and it's going to take you out the trade. But this is generally where you want this to give you a good entry at the tap, and then it'll push this direction, right? So if you understand that concept, right, now you can start to get jiggy with the trade once you get tapped in. Or maybe you get tapped in and it stops you out and you see price start to fall and you get back in the trade, right? And maybe by doing that, you get a better entry because you get back in the trade way up here instead of down here. And now you're collecting all these pips. So you're going to make up what you lost. But the point is, it was to teach you a solid entry and a solid stop loss. And, you know, that way you can get in and out of these trades. Now, what happened to most of us along the way is we started looking at these stop losses because of the greed monster in us. And we was like, I don't want to use a 66 pip stop loss. I want to narrow it down. And there is a way to narrow it down. But that way, when we narrow it down, makes it better for people like me, not necessarily better for people like you. And what I mean by that is, you know, people who hedge, we're better suited for the smaller stop losses. And I say that because if I use a stop loss, if I use a stop loss that's bad and price runs through my stop loss, it doesn't matter because my hedge trade will pick up and I'll still be in the trade. So if I wanted to use a 10 pip stop loss or 16 pip stop loss to make 14.4 RR, once I'm in this trade, if price goes way up here, it's going to activate my hedge down here. So I'll be in a hedge. But once price comes down and I kill my hedge, now I'm still going to pick up my 14 RR on the way down, right? It takes a little bit more skill to do that. It's not that it's impossible, but it just takes a little bit more skill to understand, you know, that process. So if you're struggling, I would implore you, go back to the basics, man. Like, just get yourself into the positions and enjoy some profit for the next few weeks, right? That's where it starts, is by getting yourself into the trade. Once you start getting into the trades successfully, right, then you can kind of add to your repertoire how to add an extra position to that trade. You don't have to add 5 extra positions. Just get you one, right? Now, instead of making 3%, maybe you got one that's going to make you 3%, and your second position might make you 7%. Now, whenever this trade finishes, if it's 2 weeks down the road, you made 10%. 10% is a good amount. If you're making 10% every month, it's people out there that give you millions of dollars to do that. So once you get good at that, once you get comfortable with that, then you can add further to your repertoire. Now you might add another position. You know, you might understand how to go down in the time frames and trade the smaller ebbs and flow of this trade, because there's going to be some pullbacks. But those are advanced concepts for advanced traders. All right, we have to first know where we are as a trader. If we know we aren't advanced, it doesn't even, why are we even asking about that stuff? Like, why are we even doing that? Let's go through step 1 before we get to step 7. And I think that's very important. And I think that ends video, you know, kind of spoke to me on that level, right? I would be irresponsible as somebody who's supposed to be, you know, helping you guys get to a different spot, you know, a different level. I'll be irresponsible if I don't address that. Okay. So if I ask you, you know, what your goal is, you know, I'm doing it because I want you to think about where you are as a trader, right? It's going to be hard to get to level 7 if you try to skip levels 1 through 6. Go through that process. That process is going to give you some gems that you can take with you to those next few levels, right? I'm not the best trade manager, right? But I'm probably a little bit better than you are if you don't understand how to re-enter a trade, right? So maybe if you go through these levels, maybe you can come back and show me a better way to manage my trade and level up. That's the goal. You know, the end goal is for you guys to grow and advance and take it to the next level, right? With that being said, let's talk about these markets. Okay. We had a lot of news, you know, a lot of anticipation for this US 30, and the US 30 just, you know, she didn't do right. She didn't give me the opportunity to make my 20 racks. A whole week, and we get this itty bitty candle after these explosive weeks, guys. Totally and utterly disappointing. Totally and utterly. All right. So, you know, I'm sitting here looking and I've pretty much given up on the 20K move down. So the recession won't be televised for a while. We had strong economic reports, strong economic activity. What does it all mean? Okay. First of all, non-farm payroll, we had a projection of 250,000 jobs on that payroll. We got more than double. We got more than 550,000. Okay. That number blew all the estimates out of the water. Okay. And here's the bad thing. Okay. If we had got a bad number, if we had missed the estimate to the downside, let's say we only created $175,000 jobs, that would have been great for these indices, right? Because if you get 100,000 jobs instead of 200 something, then the Fed will have to stop increasing interest rates, right? Which will allow some upside for the indices to run without having to worry about the rising interest rates. But that didn't happen. Basically what happened was the Fed got slapped in the face because the economy has basically said, man, you know, you didn't raise the rates aggressively enough. So the Fed is going to have to get serious about raising these rates. And that's not going to be good for the equities markets, S&P 500, US 30, or the NASDAQ. But in the interim, I believe we're going to run up and at least take out this level of liquidity, right? So I don't think that the first couple of days of next week is going to be a sell-off, right? I think eventually, you know, maybe after the Fed comes out with a statement, you know, they're going to be hawkish in their statements. They've been consistent. They've been saying that they want to tame inflation. Inflation is still out of control, and the interest rates aren't hurting the economy. They're trying to slow down the economy. It's intentional. They've just been unable to do it. Okay.
Hey Todd, didn't you show me something on the monthly? Is that the same level where you got that liquidity right there?
But on the monthly,
yeah, you picked a high spot on the for it to go back up to on the monthly. I was
if you think about it, this is a monthly order block, right?
Not that, but I think you said it's probably gonna go back to. You told me probably go back.
This is the arrow that I have marked. You see that?
Yeah.
Anytime we have the double order blocks, price normally runs to the second order block. But I'm talking about before we get a pullback. So it's really hard to gauge how high it's going to push up. I do believe this arrow is the level that we're gonna eventually get to before we start cooking. But I don't know If that's going to be this week that it runs up here, maybe it goes up this week, Texas liquidity falls back, and then the next week it runs up. But I do believe that we're going to run into this order block on the monthly. I believe we're going to push up to about this order block somewhere, tap into this order block. So really, the order block starts here. So I believe that. I believe that the price will at least tap into this order block before we sell. I went and looked to we don't have a I think the next report is a CPI report, like August 12th, right? So if the Fed tweets or comes out and says something, that's the only way that they're going to be able to push this market down. You know, like I don't see anything that's going to stop it from pushing up. Now, those guys are some smart guys. So trust me, they're going to know that the Fed is going to come after the interest rate harder. And what I think is that we'll start seeing 100 basis point moves, right? Okay, Wednesday, August 10th, not the 12th. So I think we're going to start seeing full point interest rates hikes. I don't think we can still play with the 75 basis point interest rate hikes if the Fed is serious about taking the inflation down, because you know, not only did we not slow down the economy, but they, you know, we had the nerve, the pay got higher, you know, like people's wages went up. So we're nowhere near where we need to be. Now, all this information, while it's bad for the US 30 and good old NASDAQ is going to drop. I don't know if y'all trade those nasty NASDAQ, but I got the NASDAQ dropping immediately. Okay, the NASDAQ tapped into this bearish order block and it gave you a bearish order block. So the pullback is imminent. I think we can target this level at least 12,965. It's about, I don't know, 300 points. It still falls in line with how it's been moving. Like it's just going to bring it right back to the moving average. And we'll have to watch and see what we get out of that. Now, why is the NASDAQ falling and not the other ones? Has to do with technology, man. Like they took a hit. The Dow Jones has some energy stocks, which didn't take the same type of hit. So tech is finicky like that. But I think we can get the sell, you know, like pretty fast on NASDAQ, like opening the week, it's going to pull back. I don't know how deep it's going to pull back, but, you know, I think that we'll get this 300 point pullback at least. You know, it might push a little further. So if you're just looking to short an indice, that's the one for you to do it with. But the news that we got from NFP was bad for the indices. I just want y'all to understand that. I don't know when we're going to see a significant sellout, but I suspect that the markets could run up for a week or two, you know, like the US 30, before, you know, we start getting close to when the Fed is supposed to meet again, or, you know, they suspect the interest rates to get higher. And here's the significance, right? Like you always hear people say that these interest rates are priced in. The problem with what happened Friday is that it has long range effects, right? Like, you know, I've shared several reports, especially with the swing traders group, that projected that the Fed would raise interest rates, and then the second quarter of next year they start dropping them. right? Well, that's not going to happen. They're not going to be able to drop interest rates second quarter of next year, based on this report. They won't be able to do it. And if you guys remember coming into the year, I told you that I think the interest rates needs to be 6% by the end of the year, and I read that somewhere. I believe that we still have the ability to get to 6% this year by taking full point increases, maybe 150 basis points. But I think that's becoming more of a reality to the people who are making these decisions, because you don't want a runaway. You don't want a runaway interest rate. It'll burn down your economy just the same way that the lack of jobs will. The only way you can control it is by cutting, like putting water on the demand. And if you can't control the demand, the interest rates are just going to keep blowing up. And we're not getting any help from China, who keeps shutting down. That just adds more fuel to the fire. So I think in a lot of ways, the Fed is fighting a dual front war. I mean, you have natural inflation because we printed trillions and trillions of dollars, but you also have, one of our main suppliers that's not supplying because they're shutting down. So, we're really going to have to start tackling inflation. And last week, one of the I think the Fed that starts with a B, like Bernanke or whatever, I think they were saying they were in favor of front loading the interest rates, which just means hike it hard first. So they might do big number hikes up front, and then watch for the effect. So don't be surprised if we get these crazy interest rates hikes, because it's necessary at this point, and the market has basically shown us that everything that we've done so far hasn't even, it is not even dampening the market. So look at it that way. So while that information is bad for these indices, it is great news for the good old US dollar. So as a trader, we have to understand the reports that come out, right? Even if you don't understand everything and all the intricacies of the report, you need to get to a spot to where you understand where to look for your setups once the reports come out, right? Before the US, the non-farm payroll report came out, I was very bearish on these JPY pairs, all right? They were going to sell. Why would I be bearish on the JPY pairs? Anyone?
Because the JPY currency is a safe haven currency, so people are buying JPY currency, so it makes the JPY pairs sell.
Well, that's true, but why?
Because you thought the dollar was going down, so if the dollar's going down, people don't take their money out. But the dollar going up, they're not running to the JPY.
That's true, but y'all aren't telling me why.
Because the JPY pair has less exposure to what's going on in the market.
It's a less risky currency, right? I guess what I'm looking for here is if the jobs report had been bad, if the jobs report had confirmed that the US economy is indeed in a recession, we're losing jobs, we've already lost production. If it confirmed that we're in a recession, then the fear out there that every other economy would hit a recession would be 100% true, and it would be in full effect. That fear has gone away now. Like there's no more, that threat is gone. All right. The number one economy in the world is not in a recession. It added double the job amount, right? Now we did slow down on our GDP, but there are ways to explain that, explain it away. You know, like maybe because other countries that we trade with aren't buying as much or aren't consuming as much of our products or whatever, right? Maybe they can't afford it. Maybe their economies are in a recession, but ours isn't. So because of that report, I expect the JPY pairs to either reverse direction or at least trade sideways, right? I don't expect them to keep giving up ground. I mean, they were headed straight to the dirt. So, you know, as much as I wanted that recession report to be negative, you know, because it sets up easy trades. Now that it's not negative, you know, I have to understand where I can pivot and look for trading opportunities. So when you got that report, ideally everybody would have understood that report is going to push the dollar to new heights, right? So the natural pivot now is to from wherever you're trading, you need to trade that dollar. Buy UJ, buy UCAD, buy UF, sell GU, sell EU, right? Like it just should be second nature, right? Because you understand how that report is going to affect the dollar. And you understand that the next interest rate, shoot, it might be something we ain't never seen before, right? So the dollar is going to run up in anticipation of some beautiful interest rate hikes. And believe you me, we got what, 3 more meetings? It's going to be 3 more hikes. ain't nobody gonna be playing. They gonna hike them interest rates. So unlike Canada, you know, Canada has lost jobs the last 2 times that they reported. They've lost jobs. Our economy has added more than double what we thought. So there is no sign of weakness. There is no sign of slowing down. So you just get on the train and you ride out. With that being said, the trade setups are remarkably easy, right? All you have to do, if you look at a trade setup like this, you can throw a fib on it. You can understand that the pullback happened. Where can you trade this to? If you just use the Fibonacci to trade this UJ, if you start at the bottom and you get the impulse move up, the pullback happened, it pulled back, you know, in between 61 and 78%. So let's just call it 65, 70%, pull back 70%. Now it's going to run up, right? If you just trade this pair, you can probably get, or you know what most people would tell you, you're going to get a trade up to the negative 27 extension, right? If you use smart money concepts, you got this pullback, you can take profit right here at the top of this move. The market has already been here. It gave you a good pullback. It's at least going to match that energy, right? It's at least going to pull right back up here. Maybe you have a take profit at this high where this blue line is, and your final take profit is here, or your second take profit, and then you just let partials run. However you want to trade it. Trade management is something that you are going to have to figure out, right? How you want to manage your trade. You don't have to try to hit the home run all the way up like I do, but you can manage your trades, take your profits, and you can grow your account. This trade is going to happen. Like, you know, it's just a matter of time. Like we don't know how long, but if you look at this bar that I was trading on Friday, this thing went up 200 and some pips Friday. One day, 200 and some pips. It's not a bad trade. So if you were trading something else, I I don't know why you would trade, something else, but if you were, you got to understand where you can look for your next trading opportunity. This is a weekend. You can find you an entry. You can get in and you can ride it out. Same with the other pairs, right? This is a British pound, US dollar. Same story. It's going to push down. We can expect it to meet these lows, and really you can expect it to go a lot lower. That's just how it's going to work. The euro, right? You got this little bearish order block. We can expect for it to push down. If you notice these trade setups, all price did was retrace to these moving averages, like it's been doing. Comes up to the moving average, sell it. Comes up to the moving average, sell it. Moving average, sell it. Moving average, sell it.
Hey Todd.
Yeah.
What's up?
Hey, did you said
I'm sorry. Go ahead. I'm sorry, Terrence. You got to unmute it.
you said Canada missed their job report the last 2 times?
Well, yeah, their economy is shrinking. Like they're not adding jobs. They're subtracting jobs.
And oil is down too, right?
Oil is definitely down, but there's a chance that oil can rebound. Like it really just depends on China.
So I'm saying, can't we do USD CAD and have a real strong, because they both going in the opposite direction?
Well, I mean, yeah, yeah. If you look at USD CAD, I mean, I've already thrown those trades. I've thrown those trades into the what do you call it? Trade ideas. There's USD CAD, USD Chef. We can trade that right back up to the top. So these trades are already there, but yeah, you're exactly right. Those you can trade all of those pairs, man. Any USD pair, you can trade it to the upside, right? And if it's AU, GU, EU, NU, you can trade those to the downside. Those are the give me's, right? Now, if you want to be creative and go find some other trades, you can do that too. But at some point, man, like as a trader, you'll figure out that you're here for the easy setups. You got to treat your trades like it's bewitching hour when you used to club. I know you didn't club, Terrence, but for those of us who used to go to the club, boy, club closed at 2. About 1:30, boy, you start looking for them easy trade setups. So you need to be looking for your easy trade setups. And these trades are the ones that grow your accounts, right? You don't have to do much maintenance. You can get in the trade and you can ride it to where it's going. Now, let's talk about a little US oil, because we all know that oil is falling. Oil pushed down. Now, oil is going to have to trade back up. It broke this level right here. I expect for it to trade back up and retest it. Maybe it'll be some news that comes out and says, oh, the US economy is still powerful, so the oil prices will go back up. They'll get to this level and then it'll push down, okay? If you're trading oil is a little bit more volatile. Maybe your stop loss needs to be a little bit wider, or you need to be open to the concept of hedging, right? I really suggest that if you're going to trade a commodity, that you open yourself up to hedging. Those are the best ways to get in and out of those trades. Now, I expect oil to push down to at least 70. I don't know how long it'll take to get there, but I heard the experts saying that it can get as low as $40 a barrel. Seems kind of extreme, but I feel relatively good about it getting down to 70, based on China's economic activity and Evergrande's still struggling. So if you're trading those commodities, just make sure you pick good take profits. And what I mean by that is you can drop down in your time frames, and you can marry some of your take profits up with order blocks on this side of the chart, right? Just shoot you a ray across these order blocks and kind of take your profit at these different levels. You guys have any questions about that? So USD is getting stronger. Trade your US dollar, take advantage of your easy setups. NASDAQ dropping, oil is dropping. Let's talk about this euro. Euro. Any of y'all trading these IROs? Anyone trading the euro?
I'm still in EF
So what
for
you
the buy.
what you expect out of EF?
I'm still in for the long-term buy, and I'm just gonna add positions along the way.
Why would you be in for a long-term buy?
Oh, I was just playing. I'm about to get out and sell it
Are you serious? Why you gonna get out and sell it?
because of your response to me
I
saying
was
I was gonna buy
It's
it.
like, can you don't fall for it? Can you don't fall for it?
I just asked you a question, man. I want you to tell me what tell me what's going on. Like, talk your peg.
Okay, so right now I have an excellent entry down at the bottom. I took most of my profits and I'm waiting on it to pull back to hopefully the 78, but at least the golden zone. And then I'm going to get another entry and buy it up somewhere.
So you think it's gonna pull back? Let me see, from the bottom.
It might not do that 78 anymore. I might have to just fib it from the most recent pullback to the up move.
Oh, you sound like you know what you're doing. Let me see. So it might pull back to this 78. I hope it don't pull back to this 78, but it might.
Oh no, I definitely have it coming right there. 97.37, because it's a 4-hour untapped order block on, well, that's one of them, but it's several OBs right there.
It's a daily too.
Yeah.
And that's quite possible. But we'll see. I hope it only comes back here to get another entry. But I wanted you to tell me, why you felt like you would buy the euro against the CHF.
Well,
be the same.
Elfie informed me that the euro, their interest rate was increased by like a large amount, for the first time in 10 years, or like a long time, the first time in a long time. So that's good for the euro.
Now I know how them high school teachers feel whenever they ask the question, the student be lying.
I'm not like.
I know Elfie really did say that. But as a check for understanding, it would have just been cool for you to say, hey man, like, since the fear of recession is going away, we knew none of this. We knew none of this when we saw this wick, right? We didn't know about the reports. We didn't know anything. We just saw this wick, the daily lows. We said get in the trade. We took the trade. We had no clue that the fear of recession was going to dissipate, and the CHF gets weaker as the fear of recession dissipates. See how that stuff just works hand in hand? See how the charts told you what was going on before it happened? Look at all that silence. Y'all understand what I'm saying? Am I making sense, traders?
Yes, we're all taking notes. That's why we're frantically writing.
You're all taking notes. Yeah. Right. Do y'all really have pens and paper? Probably not.
Yes.
I literally do.
See,
I can quote you on everything that you said for the last couple meetings.
but yeah, that's awesome. You guys are gonna advance. The rest of you 16 mofos, y'all still gonna be here 5 years from now. Waiting for the analysis. No, but seriously, if you understand what affects currencies in the overall grand scheme of things, it can really help you pick and choose what pairs that are more likely to go up or down based on the given news report, right? So here's another pair that had a weekly order block last week, right? But you got this huge weekly order block that said sell. Then last week we got this weekly order block that said buy, which is kind of strange, right? But again, it is a CHF pair. And we've been getting a run up, 78 pullback, a run up, a 78 pullback. I think this thing is going to eventually push up and out of here. So if you're trading this pair, it had been bouncing basically back and forth. They've been consolidating at this level for, well, since 29th of June. So if you are a consolidation trader, you could have made like $1 million just trading this up and down. But I think, based on the economic reports that came out of here, if the National Bank in Britain or what do they call the British bank? I'm just BOE. If the BOE can come up with a plan, and sell it to the folks, then I think this will go ahead and push up. And I think that that's going to happen. Both the pound and the euro have shown a little life here lately. Russia's soft army is really struggling over there to beat the nation of 300 people. So I think people are becoming numb to the atrocities going on over there. Americans are numb to it anyway. If it lasts more than 2 weeks, we forgot. But I just want to make it clear that if you're not already in one of these trades and you're just looking for a trade, the US dollar is probably where you want to do that. It's probably where it's probably the safest place to be, and it's probably going to be the more lucrative place to be over the next few weeks. If you want to gamble with the indices, hey, by all means, go to Vegas and gamble with the indices. Those moves, you don't need a bunch of points in the indices. But if you want a steady run up, you're probably going to trade the dollar. That includes you there, Sean, the dollar. Good old greenback. All righty. Oh, the AUD chef. See, the theme here is the chef is in a giving mood. The chef wants to give back everything that it's borrowed, you know. So I think it's time to take trades against the chef. If you guys trade the chef. Oh, there's that 4 hour. There's an alert here for an entry. Or the 78.6 is here. So if you're going to enter here, you can cover your stop loss. You can cover the 78.6, or you let your head start a little bit past the 78.6. There are a number of trades to take, basically. Okay. Buy against the chef. Buy the dollar. The dollar's going up. The chef is going down. The JPY is going to go down. Do your markups before the market starts. Set your alerts for where you want to enter before the market starts. Don't wait till the market starts to go try to find setups. Once your alert is triggered, then you can open your chart and you can look and see where you want to go and enter your buy stop or your buy limit or whatever, right? If you do it that way, you will have a successful week. If you do it a different way, then who knows how your week will turn out. If the goal is to do this for any period of time and do it successfully, I would become serious about the way I do my chart markups. All right. For those of you who don't know where you take your profits, all right. If you get in the trade here, maybe your first take profit is this level, or you can do it. I would do it at the bottom of this order block, right? Because you're probably going to get a reaction here, probably pull back a little bit. Then it'll go to this order block. You'll probably get a reaction at this order block, might pull back a little bit. Then you're going to get a pretty decent run, you know, maybe to these highs right here. You don't have to wait until you're all the way up here, right? If you follow ICT's teachings, this green line right here, this is probably where you want to start thinking about protecting against a pullback, because the teaching, as the teaching goes, this right here, this entire pullback right here is an order block. This entire pullback is an order block. So your order block, you know, maybe you want to take your profits, or you want to protect your profits. And what I mean by that is once price passes this line, maybe you move a stop loss right here. This is like the line you're not willing to give up. And hopefully price just pushes up through here and doesn't pull back to your stop loss. Do I have any questions over anything that we've covered?
Hey, that take profit because of the order block, like
I can't.
ICT, is that like an 8-hour and
Terrence, you're cutting in and out, so you got to re-ask.
I said that take profit because of that order block, is it because you're on the 8-hour, or is that on any time frame? Like why are you afraid of that?
Right here?
At the top, that V that you pointed out was an order block based on ICT.
Well, it's not that I'm afraid, but if you're in this trade, right? You see how this trade goes up and it comes back. It goes up and it comes back. You don't want the trade to come up here, hit this order block, and pull all the way back down here. And you're waiting to close out because, so in essence, this is what I'm saying. You would have gotten this trade here, you would be up 238 pips. You don't want to trade in your 38 pip game because you're waiting on 86 pips. That doesn't make sense. You don't want to trade 236 pips for 86 pips. Does that make sense?
Yeah, I got you.
So there comes a point in a trade that you have to think about the money that you already have made. Like that money is not in your account until you close the trade. But if it's in the blue, you have to determine an amount that you're not giving back, right? So if this trade pulls back 15 pips, I'm cool with it. Anything over 15 pips, I'm cutting it off, right? The reason why I identified this area is because if you look at this drop, this is an extreme drop, right? Chances are when it goes up, you're not going to get an extreme push up like that. It's going to gradually go up. So it might go up to this level because this is where the drop happened. This pullback is the order block. All 1, 2, 3, 4, 5 of these candles, right? And if you keep going up on time frames, you know, it might be a weekly order block. It's a daily right here. You see it?
Yes, I see it.
So you don't want to try to gamble to see if price is going to push all the way through that daily order block. Hopefully,
Hey, if I make 200 pips, I'm out anyway. Just saying.
well, I mean, I'm not gonna close it manually because it made 200 pips because it might make another 200 more. But what I'm going to do is, even if you took partials and let a portion of it run, or you let the whole thing run and just put your stop loss behind it, it might bounce around here and never hit your stop loss and keep pushing up. You know, that's the way you're going to hit the home run in trading if you're doing it properly, right? You're going to be smart by protecting some of your trade. Like you close out maybe 80% of your trade and let 20% run, or you close 90%, let 10% run. That 10% could end up running, you know, on up. You know, there's no telling how high it can run up. But that's how it should look, you know, in reality. And it's, you know, as long as you're making money, it's hard to argue, you know, especially if you're coming from losing money. So as long as you start making money, that's step one. There's, you know, as you get more comfortable making the money, you see the trade setups, then maximizing the profit, you know, that's more advanced. You know, that's for the advanced trade as you advance as a trader.
I agree with that.
Do I have any more questions? Questions? So I guess everybody was successful last week.
Can we look at NJ and you can help me get out of my hedge?
Help you get out of your hedge.
Yeah,
I
I'm
can't help you
stuck.
get out of your hedge. If you're stuck in a hedge, you got to wait. The market will let you get out of your hedge whenever it decides whatever it's going to do. So NJ has a daily order block that says it's going up, which I suspect all of them will end up going up. If I were you, I would add on to the buy side versus the sell side.
Yes.
That makes sense?
Yes, no, it makes perfect sense. Yeah, no, I agree.
So once this pulls back, you know, I have my alert set already. You need to go and do the same. Once it pulls back and you find an entry, then you can add a position to the buy side. And at some point, your buy side will outweigh your sell side, and you can start closing it out. You know what I'm saying? Or as it goes up, you can start closing out the sell side anyway, and just
Right.
add to the buy side.
Yep. So I shouldn't be afraid that it's gonna come down to that bottom bullish order block.
Well,
Since two back-to-back order block.
It could very well do that. I don't think that it will because it just tapped in. Friday before it went all the way up. I don't, so if you just put a fib on this candle. This candle 78% is right here at the bottom, at the bottom of my where my hedge position would go, right? So you can look for entry at any point. Here's the golden zone. I guess the golden zone is where I have that alert. You see where this alert is?
Yes.
That's where the golden zone is. So maybe you just watch it, you know, if you're awake. Or maybe you just have your entry here and your stop loss, you know, a little further down.
Uh-huh.
I don't think it's going to retrace 100%. No.
Right. Okay. No, this is helpful. Thank you.
I don't know how this thing got backwards. Any other questions? All right, good folks. It feels good to make a hour video on a Saturday instead of a 6-hour video. Tomorrow, you know, I don't know if you guys have losses you want to review, hit me up and we can get on at 10 o'clock. But if not, then you know, we'll get on for the swing call at 11. You know, we talked about a lot of these positions, but you know, we'll probably try to go down further and talk about entries and all that good stuff. All right, guys, gals, y'all enjoy your weekend. I appreciate you hanging out.
Thanks, Todd.
All righty.
Thanks.
Thank you.
You're welcome.